Thank you very much. Okay. Hey, this is going to be a short session today. We just want to get right to the point of the matter, and that is that um, when to look for setups is the absolute most important aspect of trading. Um, we all have our toolkit of setups that we like to use across the spectrum. We're primarily focusing on scalping here, but I do a lot of pairs trading and option trading as well. And the environment or when to use a specific setup is far more important than anything else that we have. And it took me a long time trading to figure that out. And once I did figure it out, I spent and still do spend all my time defining the environment. My setups, I don't ever change those. I don't have to tweak any of those. They're just there. They're on the shelf, ready to use whenever the wind shows up. And it's a little more tricky in swing trading than it is in scalping. So scalping is very specific. It's very surgical, and we can uh, we can, in theory, define better of when to look for some of our key setups. So that's what we're going to talk about today. Just going to show you some techniques that I've continued to talk about, but we'll go into them a little bit deeper in the session today. So before we start, of course, disclaimer, I am not a financial advisor. So, just take what I say with a grain of salt, confirm everything that I tell you. Um, and don't take anything that I say as a recommendation to buy or sell any underlying. All right, with that being said, let's just take a look at some of the charts here. So for us, if you're in the A plus setups community, you already know that we have three setups. We have we have the shallow pullback, the deep pullback, and the deepest pullback, the jiggle, the reverse mullet, and the puncture trade. Those are all black and white rules built around specific setups that are measured inside the NASDAQ. Now, these setups work across the board in active traded futures markets and stocks, but I only have enough bandwidth to really focus on one symbol, and that's the NASDAQ. So we have our setups, have statistical profiles built around the setups. But those statistical profiles are simply the setups in a vacuum. And for me, the setups have to perform before I would ever include them into an overall trading framework. So the trading framework, what we are migrating to and transitioning to inside of A plus setups is we have our setups. We know those, we see those, we can identify those whenever they are forming. Our software helps to visually alert you to that. We can see on the new release, we have a status panel. We can see that the jiggle is setting up, it's aligning with cumulative delta. It's not yet aligned with stochastics. That's set up in a vacuum. Now, what would make this more potentially more palatable, in theory, a better setup was if something occurred that would force us to look for one of our setups here. Otherwise, you're just trading these setups in a vacuum. And we want to get away from that because our setups alone can only take us so far. Punto. That's it. That's nobody can tell you any price action alone can only take you so far. So our setups are designed as entry mechanisms. And I can't improve the setups alone, to substantiate an automated system. I know that's what everybody wants, but the setups alone, I can't do that. In theory, there's a possibility. I won't say there is, but there's a possibility that if you can find that win, then there's a possibility of automating one of these these setups. We already have the black and white entry rules. We just need the win trigger that occurs frequently and reliably, and something we can put, some black and white rules around. Okay, so that's what we're moving toward. And our statistical profiles that we keep, that is a hallmark of our setups, they vector us into the right time period to trade, where the liquidity is and when the setups are working, and to confirm that we have a directional edge. Because even with a directional edge, you still no guarantee you're going to make any money. But with the edge, your setups work. And then if you can combine those with a trigger, with a win, with a reason, then that's that's what we're migrating to. And then of course we develop sweet spots, at various take profit levels to help us, manage our trades, all based on data. So there's no guessing. All right. So what we're going to look at today is, two methods that are independent of each other, but they fit the bill. Now, this is concept. I want you to understand these are two things that I use, but this is a concept, and the concept is more important. It doesn't, what I show you here, I'm not trying to sell you on. I'm trying to sell you on the concept. The concept to look for a reason to take one of our setups, because we already know how to get into a trade. We just need when and a reason. All right, so the two things we're going to look at is a basic trend line method, and then something we call the triple focus. Now, I'm going to talk about the triple focus first. Let me just delete these. All right, I'm going to spread this out to show you the concept. You can use this on anything that you want. It's one of the tools we've developed in the room, but the concept will apply to anything that looks or smells like this right here. So the triple focus, what you'll see is I have an NQ chart up here that's fully compressed. I don't want to see any granularity. I just want to see kind of like a line chart. That's all I want to see here. Because I want to see the big picture of both of these independent techniques that I'm going to show you. So again, triple focus is here on the bottom. What we are looking at, and this is a perfect example, is here we have from Globex, and we're just going to look at today, because I don't have to go back and search days and days to find you the cherry-picked version. We have plenty of examples here in the current session. So here's Globex. Now, I'm going to put a marker here. I forget what the right here. All right, so right here, when the triple focus presses above a threshold that I have set intentionally for the NASDAQ, it colors it white right here. The market makes a higher high. We come back down. What I'm looking for is a higher high in price and a lower high in the indicator, the classic divergence. Okay. But we get a higher high, but we also get another higher high. So the clock starts again. Now I'm looking for another higher high and a lower high. We get it right here. So now we have the divergence trying to play out right there, right here. So now all we need is a bearish A plus setup, either more than likely the reverse mullet or the jiggle. And we don't get it. It pulls back, it comes back up, and it just keeps going up. So guess what? It resets the clock, and we push back higher, make a higher high here, a higher high there. So again, the clock starts here again. So now we're looking again for the same thing. We make a higher high here, lower high, but then it immediately reverses and makes another high. Clock moves forward. So now we have higher high in the indicator, higher high in price. Now look at what we are starting to build right here. This is what we would be waiting for. Price goes higher, indicator goes lower, classic divergence. Now the clock is ticking in our favor. What we need now is the first A plus setup scalp trade. Now let's go over here and let's make this global. And again, how this plays out is how it plays out. So right here, we get it. This is the first A plus setup scalp trade. It is a jiggle and it's a winner based on our statistical profile. So we get first take profit, and you probably get a break even on everything else. I don't know that you get 40 ticks out of that, but you would um, definitely get first take profit, probably break even on everything else. But that's what we wait for. That's this model. That's the bearish move. Now let's look to see if we can find. I'm going to go faster on this chart. Clock starts here. Actually, it started here, white, below the threshold. We rally, we come back, we make another low. Clock starts there. Now we are looking, because this is going to play out. So what we need now is we need a lower low in price and a higher low in this. So we get it here, but there's no setup right there. That's not an A plus setup. We get a lower low there. So let's take a look at this and see if this plays out. We're just looking for that first setup. That's all we're looking for. Now, let's go back over and check to see if any one of these first higher lows is an A plus setup. And here we go. The jiggle right off the bottom. Right there. A reverse mullet. Nope. It was a jiggle. That was it right there. So that was the first trade coming out of that divergence right there. Let's see if there was anything else. So here we have something setting up right now. If we get, this is two down closes here, and this would be a reverse mullet. High, higher high, lower high. Just looking to see if you get a reverse mullet to the downside, and it's still potentially valid. Let's just see if it plays out. Entry would be right here. Give it just a few minutes. See if that first A plus setup plays out. Entry is on the second reversal bar. Everything is still, no, it's not a valid mullet. I just saw that the pullback went too deep. We went too far above our mean line right there. So anyway, not going to play out on that one. Doesn't fit the criteria. So okay, we pass and we just wait. All right, so that's that's how to use a divergence tool to identify, your first setup. And that's all you're looking for is that first setup off of that. You need to have a entry mechanism like we do in the room with either the jiggle, the reverse mullet, or the puncture trade. That's already taken care of. But this is just a way to look at that. Now let's take a look at the trend line method. And I'm only going to show a couple of examples here. Let's again get rid of the I can't see my screen there. Okay, perfect. All right, so let's take a look at some of these trades going back. Now, I simply eyeball the trend lines. I draw the trend lines to illustrate what I'm looking at in the room, but I'm typically eyeballing these things. So there's nothing to the downside here. If you draw the trend line up through there, we don't get a break to the downside. If we drew a trend line across here, this is one in the room that I called out, that I said um, I was going to pass on because the pullback typically on these is a jiggle or a reverse mullet, but it ended up being our puncture trade. So anyway, we had a break. It tried to break there, but failed again. Got back above the trend line. So this is first setup area here. And let's just take a look at that. The trade that I waved off on right there. Here's our entry triangle right there for the puncture trade. Bottom picker present, whole 9 yards, and it just worked like a charm. All right, so that's the concept there. Let's take a look at now. Some of these are really the key point I want to make on the trend line, and this is a really good example, is that let me close this down so you don't get confused. These are independent of each other. So the trend line has nothing to do with this divergence tool. So here we have a messy setup. So I just bypass that altogether. There's um, there's no reason to force the market to conform to what you want it to look like. Just bypass it. You might be saying, well, that was a great setup right there. It's too messy for me. Here's a better setup that I think, did we actually take this one in the room? We'll see. No, I don't think we did because I had a horrible morning trading this morning. I usually go for two touches, the break, and then what do we have there? We have our jiggle. Now there's no arrow here because I have our flagship model set to only show an arrow when it's in complete alignment with our tools. But when you're taking these first setups, I don't look for the alignment. I'm just looking for our setup to fire because I have a reason to look for the setup. And I'm just looking for the basic jiggle setup right there. Doesn't need to align, doesn't need to do anything. Here you had another break. Could use that. And right there was the first actual setup. We actually called this in the room after the fact. Hey, it was the first setup that we had after that break right there, but I did not take it. I had already put myself in the dunce quarter for the morning. So I did not take that trade, but that was the first one there. So this is just, the concept of when to look for setups so that you're not just taking every setup that rolls, your way. Because eventually everything will look like a setup. And that's what we want to prevent. We want to try to scope out better and better definition of when the environment changes. And that's the best way I can describe this. If we scope out and we can find out when the environment changes, then we look for one of our named setups or an entry technique that you prefer. But over here we have clear black and white rules for each of our setups. So anyway, that pretty much concludes what I wanted to talk about this morning. Again, if you're new to the room, we're going to be releasing the flagship model soon. And once it releases, our prices will go up. We've held things at bay for a little over a year now. So we'll increase when the flagship model launches. Um, all of our products will require you to buy those before you come into the room. And then we're going to offer a 7-day trial, for those of you that just want to come into the trading room and see what's going on. But we should be launching that Monday. Once we launch this, then we'll be coming out with how to take advantage uh, if you're interested in coming on board and kicking the tires. So right now, um, we still have $29.99. You can still get everything that we have, and you can use this code and get 5% off. So this is how you get in touch with us. So the sign up is at patreon.com, A+ setup. And we have live trading Monday through Friday, training four times a week. And we try to make everything as black and white as possible. So anyway, hey, thanks for joining. Yeah, about 24 minutes. So thanks for joining in today. Drop me a line if I can help you in any way, shape, or form. And hopefully this concept will help you to shape your trading plan and get it tighter and tighter so that you can become more and more consistent, in your scalping program. Hey, good luck in your trading. Just let me know if you have any questions, and hopefully we'll see you at the